Namibia has a core objective to protect the financial system through the prevention, detection and on-time response to cyber attacks. It further facilitates the sharing of information, intelligence and good practices between financial infrastructure and raise awareness of cyber security threats. Now, the Bank of Namibia has launched its Financial Industry Cyber Security Council. I am now joined by Immanuel Hawanga, the Bank of Namibia's Deputy Director, Offsite Analysis in the Banking Supervision Department, to share more light on the Council's purpose. A very good evening to you, Mr. Hawanga, and thank you for joining us on the Daily Roundup.
Good evening, Sony. It's my pleasure to be here. Thanks.
Mr. Hawanga, to what degree are cyber crimes involving financial institutions in the country?
Thanks for the question. The Bank of Namibia unfortunately does not have an accurate record of regard to cyber crime. However, for the populace that we regulate, which are the banking sector, we do monitor cyber crime activities and record the numbers through our complaints platform. And what we have seen, the most prevalent cyber crimes were phishing and social engineering. And in line with digital initiatives, we have seen those type of cyber crime have been increasing.
Now, countries continue to lose billions of dollars through cybercrime. Briefly speak to us about the Financial Industry Cyber Security Council and its objective.
It's really a forum, another word for a committee that will consist of the deputy governors of the Bank of Namibia, heads of fellow regulatory institutions like NAMFISA, CRAN. It will also consist of executives, majorly heads of other institutions in the financial sector. And this council will be supported by a working group of cyber and information security specialists. And these are coming from your regulated institutions. In the space of NAMFISA, being your non-bank financial institutions, we have financial sector associations which are responsible for coordination of supervisory practices between the regulator and the institutions, those being your Bankers Association, your institutions like NASIA, institutions like PEN, and then you also have other non-bank institutions like your Forex bureaus, your financial market infrastructure associations or institutions that operate in the payment system stream, and last but not last, your commercial banks. In terms of the second part of the question, where you relate to the objectives of the council, it's really the aim of the council is to meet 5 objectives, being sharing a common approach amongst institutions to deal with cybersecurity within the sector, improve really the cybersecurity maturity levels for the institutions that will be part of the council. Furthermore, improving risk management tools with regard to cybersecurity, also initiating cybersecurity efforts, and lastly, sharing of intelligence to address cybersecurity risks within the sector.
How will this council safeguard against threats that are perpetuated by faceless persons who can at times hack a banking institution and never be taken to task?
To put it in short, this is really the responsibility of the financial institutions to ensure that the operating environment is really safe and secure and not that of the council. However, the council have a role to play through enabling sharing of information, sharing of intelligence, and raising awareness of cyber threats, also raising awareness about cyber vulnerabilities and also incidents between member organizations, and therefore also provide strategic advice and guidance in terms of handling these cyber threats. And in that all, it's to improve the resilience against threats. Lastly, also linking the members to our national intelligence agencies within Namibia.
So talk to us about some of these threats and vulnerabilities that Namibian financial institutions face, as well as individuals.
Johnny, in general, if you look at threats in the financial sector, it covers things like your data breaches, cyber theft of credit card information, really the takedown of networks of various institutions, the hacking of systems, and the requesting of a ransom. In the cyberspace, they call it ransomware, and your popular ones being phishing and social engineering related to individuals as well.
Can you please differentiate between cyber risk and cyber risk management?
In terms of risk, cyber risk makes up one of the risk categories. And in terms of those risk categories, cyber risk is part of operational risk. And in short, it's a risk that may result in the unavailability of data or information. And it can negatively then impact the information technology, in short, IT infrastructure of any institution or its business operations. If you relate that to cyber risk management, it's really the process of identifying, analyzing, evaluating, and addressing the institution's cyber risk threats within the financial space.
Now, we understand that there are 3 transmission channels because of cyber risk that can lead to instability in the financial system. What are they and how are they interlinked?
Thanks for the question. In terms of transmission channels, there are 3 and they are really interlinked. And if I start off with the first one being interconnectedness, you will see the link to the others being loss of confidence, and the last one being the lack of substitutability. And in terms of interconnectedness, if you need to understand it, it's if they are in the banking space, if there are interbank transactions amongst banks, that's create really the interconnectedness or the connectedness between one bank with the other. And to better explain it through examples, how these 3 transmission channels are linked, is really to say that if a major cyber incident happens at a large bank, this may really disrupt the banking services. And it really causes some liquidity disruptions, and it also leads, in most cases, it leads to credit losses within the interbank system. And because of this disruption, as a result of the cyber incident, the bank that is being involved may be unable to meet its payment obligations, and in turn it can result in a liquidity crisis in the financial system. And therefore, as a result of the crisis, this can be seen then as a loss in confidence, or customers will start to lose confidence in the financial system. For the last one being lack of substitutability, you will look at an example to say that if there is a dominant technology provider and that provides a financial system to various financial institutions, if this financial system is being compromised, it would be very unlikely to find a suitable replacement in time in order to continue as business as usual.
Well, thank you so much, Mr. Hawanga, for speaking to us this evening.
No, it's a pleasure, Sonia.
That is, of course, Immanuel Hawanga, Bank of Namibia's Deputy Director, Offsite Analysis in the Banking Supervision Department, shedding more light there on the council, the Financial Industry Cyber Security Council that has been launched by the Bank of Namibia.